Bitline or NILE has been trading in popularity recently, and lot of people are wondering if they should be buying more, selling what they have to just m- standing on this side to wait for better timing. As the market is still very volatile at the moment, we should be careful about which stock to pick and what would be the exposure and the timing of the position we are taking over the past few days. The price action of an IOE or Bitline has brought the stock at 63 cents before stabilizing around 55 cents. The short-term price trend of Bitcoin has been bearish. The market has been hesitant to send the stock at higher place, and we should looking at the pace of regrouping and then the pickup of volatile soon afterward. I think that the current price action is not going to be last, and the market has to make a call fairly soon. When we look at the long-term price trend of Bitline, it has been bearish overall. The company on operation, the current market narrative, and the issue that is focusing on are likely to the main reason why the capital is not being put in the stock, and we should see the situation a bit now the bit like a continuation of the market as a whole. We often tend that like that the individual stock have their own stories and often overlook the collective tendency to go for the same path. Now let's have a look at the technical of the stock. The trading volume of Nile has recently been 13 million share versus again the average volume of 67 million share over a previous fatigues to which period it price has fluctuated between 15 cent to $3.17. The market cap of Bitcoin was currently at $15 million versus the enterprise's value of $84 million. The difference between the market cap and the enterprise's value is the premium or discount the financial market is willing to allocate the company based on its current fundamental leverage and the asset composition. The enterprise's value is combined value of company asset minus the debt is the company has a lot of debt or a negative image among the market participant, and the asset volume may be inferior without being said at the end of the day. It's remain an estimate of the market every time it fully publish its financial statement, so it's less reactive than the market and often more lenient from many companies. One key element to note regarding the enterprise value is that for many growth times company one of the most significant assets they own is the goodwill, and goodwill is the expectation of the market that the company is able to generate more profit to grow more rapidly than its rival because it may be have a better management team, a stronger brand recognition, or a bigger online following. It is what makes this company unique compared to its competitor. In other words, it is not intangible asset that company can use, but it often the reason why should some company are perceived to be a trading at a discount because the enterprise's value is less reactive than the market cap. It is a very volatile situation. If the company goes to liquidation, the goodwill would be completely gone to the stockholder, would be left with the far less assets than whatever that is written on the balance sheet at the moment. When we compare the current price of the historical price fluctuation, the stock is 10% higher than the 1 month low, 10% higher than 3 month low, and 10% higher than 52-week low on the option market, which often give us a hint about where the stock price is likely to go next. The implement volatile is 333% versus the historical volatile of 173%. The put call volume ratio is currently at 0.01, and it's normal for any stock to have a higher put option than they have deserved, as a many institutional investors hedged their long position by buying or put option. The most recent volume of the option traded is 17,000 contract a day versus the 30-day average of 40,000. In the terms of open interest, the most recent volume of open interest is 1,80,000 contract versus the 30 days average of 1,10,50,000 contract. In the terms of shareholder structure, institutional shareholder own about 15% of outstanding share. The biggest shareholder includes Vanguard, BlackRock, and Renaissance. it is relevant to understand that shareholder composition of the company, as it often help to determine if you should to holding the stock long term or to the view it as a trade opportunity in the short term. The stock is mainly held by retail investor. It may be sign that the stock left to the depth of justice a long-term trust from shareholder. Typically, the concentration is there should be at least 25 to 30% of institutional participant for the stock to perceived as a sound investment and not just a short-term trade. This is obviously subject to a lot of expectation, as many great companies are also mostly held by the retail investor, but that they tend to be expectation and not the rule. Let's also look at the short-term interest present in the stock, which is the amount of position aiming to profit if share price falls lower sometime when there are significant short interest in the total volume. This can be designed sign that there is not organized shorting operation going on, like what the total float of 53% of the transaction coming out the dark pool. Usually, if the short interest is about 15% of the total volume and the significant chunk of short volume coming out of the dark pool, this is a suggestion that the institutional optional have been taken a short stance against the stock and that there would be a potential for a short squeeze. Now, having said on this, my overall recommendation is high position in NILE and to make sure that you have enough allocation room and for later purchase if the stock average goes lower. In the case, I actually recommend the hold is fairly decent amount of the time with a small position so that you can have benefit from the update of the market later. I think that bit on now is going to be have a pickup in volatile as we forward, that we should be ready to share price to swing both ways heavy in a position along with enough allocation of later. I would recommend that the complement between 1 to 3% of your portfolio in the stock, and I would also recommend that split your allocation and pitches on 20% at a time so that you can purchase more even the D tracks. Now, given the current market environment, I believe that equity market is in a vast phase of correction, especially when it comes to the tech and growth of time equities. The financial market has been living in the breathing thanks to continuous creation of new capital with the different ways of quantitative easing, which have been concerned on the price asset as well as their wide of interest rates keep relative lower over the year of increase of amount of capital in the circulation. This will keep putting significant pressure on the profit that we can accept an investment product across the abroad board, and this by this way the its reality that may be shifted to year come in the interest rate of core infrastructure within our globally finalized system increase. It useful to remember that the market does not represent the real economy, and of course. So I ended the video. If you like the video, please subscribe the channel and also press in a bell icon to the money trader. Thank you.